If you're nearing retirement and planning on withdrawing from your 401k, you're likely aware of the potential penalties if you don't manage the withdrawals correctly. But did you know that by using smart tax strategies, you can avoid these penalties and keep more of your hard-earned money? In this video, I'll break down exactly how to navigate the tricky rules around 401k withdrawals and use tax strategies to avoid unnecessary penalties, ensuring that you get the most out of your retirement funds. Now, before we dive into the nitty-gritty of tax strategies, let me quickly remind you, if you're serious about protecting your wealth, especially as you approach retirement, check out the first link in the description for a free gold IRA guide. Thousands of Americans are opening gold IRAs to safeguard their retirement savings from the potential risks in the stock market and inflation. It's an option worth considering, and the guide will give you the detailed information you need. So, let's talk about how to avoid penalties on your 401k withdrawals. First off, you need to be aware of the age requirement. The IRS imposes a 10% early withdrawal penalty if you take money from your 401k before the age of 59(1)(2). This means if you're under that age and need to access your retirement funds, you're looking at an extra 10% on top of your regular taxes. But here's the good news. There are several exceptions to that penalty. One of the most common ways people avoid the 10% penalty is by using what's called a 72T distribution. This allows you to take penalty-free withdrawals if you follow a series of substantially equal periodic payments, CPP. Essentially, you agree to take a set amount of money from your account over a period of time, which the IRS regulates to ensure you're not withdrawing too much too quickly. It can be a great option if you need funds before 59(1)(2), but it requires careful planning. If you're considering this, it's crucial to consult with a tax advisor to ensure you're following the rules to avoid penalties. Another strategy to avoid penalties on 401k withdrawals is by considering your withdrawal timing. If you're nearing 59(1)(2), it's worth planning your withdrawals so you don't trigger that early penalty. You might be able to wait just a little longer, and that extra few months can make a significant difference. Now here's another key thing: required minimum distributions, or RMDs. When you reach the age of 73, you are required by the IRS to start withdrawing from your 401k, whether you need the money or not. Failure to take your RMD can result in a hefty 25% penalty on the amount you should have withdrawn. So don't overlook this. It's important to stay on top of these dates and understand how much you're required to take each year to avoid that penalty. A crucial point to remember is that tax-deferred growth doesn't last forever. And while you can avoid penalties by following the rules, taxes are still going to be a part of the equation. One thing to consider is whether you might want to look into a gold IRA. Gold IRAs can provide you with a way to diversify your retirement savings and protect against the volatility of the stock market, while still offering tax advantages. If you're looking to minimize taxes and protect your wealth from inflation, this could be an excellent option. Now, to recap, the key strategies to avoid penalties on your 401k withdrawals include: 1. Understanding the age rules and using exceptions like the 72T distribution if you need funds early. 2. Timing your withdrawals strategically to avoid the 10% penalty. 3. Staying on top of required minimum distributions to avoid the 25% penalty after age 73. 4. Considering alternatives like a gold IRA, which offers both tax advantages and a hedge against market instability. If you're serious about protecting your wealth, especially if you have 100k or more in your IRA or 401k, or even 5M plus in savings, make sure to check out the free guide linked in the description below. It's perfect for American retirees looking to safeguard their wealth and create long-term security in retirement. Take control of your retirement today and use these strategies to avoid penalties. And remember, gold IRAs can be a powerful tool to ensure your wealth is protected as you move into the next phase of your life.